Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Thursday, April 13th, 2023. Before I jump into all the charts, I just want to encourage you to please click like if you haven't already. It helps us get found on YouTube, and subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded, and that includes the daily Tesla and daily Apple report. So a big picture, we came off of longer term support in early January that's presently in the very low 60s, low 70s. We are expecting still the 229.39 level, but it may take a little longer than the next few weeks. In fact, it could be the next couple of months in what played out actually on Wednesday. And so I'm going to backtrack a little bit. We did have a settlement below this speed line about a week ago that today is at 193.01. We need to get up and over that line study to indicate a good April low, and then likely bullish continuation into the upper 210s to upper 220s. You can see there's a lot going on up there. I'll get to that in a moment. But what actually did happen was a settlement below this channel bottom that we'd been breaking much over the last few days, but not closing below. And yesterday's outside day settlement below this channel bottom today at 186.32 was the sort of final shoe to drop on a kind of a sell signal process, we'll put it that way, over the last week. And so we're going with this sell signal. If you're long the 220 or 230 out of the money calls, or if you're long the stock and your time horizon is 2 to 3 weeks, 3 to 5 weeks or so, my suggestion would be to liquidate those. Unless, of course, those 220 calls go out 6 months to a year. But if they're only, if they expire over the next month or two, you may consider liquidating them. Because we're expecting over the next 1 to 2 weeks, 156.68, and as we continue into May trade. Now, this descending channel bottom is our 1 to 2 week target. It can contain weekly selling pressure, as you can see here, and there is the possibility that we can continue all the way south into this zone of support that is presently 142.12 to 150.52. And so will we test that lower area? The answer is yes if we close below 156.68, but I think this market can do that anyway. I've been mentioning 146.06, the 5/8 downside Fibonacci. Now, it'd be nice if this channel bottom was descending at such a rate that it actually converged over the next 2 to 3 weeks with 146.06, but that doesn't happen until very late May, about 5-6 weeks from now, and I don't think it's going to take that long. So of course there is the scenario where we fall to 156.68 over the next couple of weeks, and that is the actual low. We turn higher then and start receiving meaningful buy signals on the way up that turns the market back into the 220s. That 229.39 long-term channel top still sort of there as our ceiling of resistance into later year. Let's talk the day itself. And I will jump back to this chart here. 186.32 is our ceiling, not only for the day, but through the rest of April trade. So whether you're a day trader, 3 to 5 day swing trader, or a 2 to 3, 3 to 5 week position trader, this is your ceiling of resistance. Below which, 176.11, just an intraday pivot point. I wouldn't aggressively buy it, but aggressive day traders may consider it. That is nothing more than the low from last Monday, this Monday, I should say, 2 days ago. If we break it, 169.16 is likely. Now, I don't have that illustrated anywhere, but I can tell you that 169.16 is nothing more than a steeply descending channel bottom. If you take a line from this high to this high, as you can see here, and then project a channel bottom off of there, that takes you down to 169.16. We may actually test that level today. So holding below 186.32, the day trade remains bearish, expecting 169.16, where a daily low can be made. The 3 to 5 day swing trade, combined with the 1 to 2 week position trade, it remains bearish below 186.32, 156.68 expected. I'm going to say by the end of next week. And that's maybe, it could take the better part of 2 weeks depending, but I think especially if we close today below that 169.16 formation, we're just a few days away from testing 156.68, where we could actually bottom out through next week. So if you're playing the short side now, or if you are short, you can consider buying 156.68, because not only might we, this actually could be a decent rebound on a weekly basis, and as I mentioned a moment ago, possibly well into May activity. And then you could also call 156.68 the start of a gradually narrowing range of targeted long-term support down to 146.06. That is the 5/8 Fibonacci from the January low to the February high, that can indeed contain selling as we move through the rest of the second quarter. And from here, we can turn back up into the 220s again. Well, not again, but into the 220s within several months of testing this 146.06 area. Now, of course, we have the daily chart where we've got the 146.06 is smack dab in the middle of this band of long-term support. So, bottom line, we are heavy through next week below 186.32. If you like the Daily Tesla Report, a wickedstocks.com membership delivers regular daily video analysis in both the SPY and the Triple Q, weekly video analysis in the S&P 500 Index, the NASDAQ 100 Index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Do yourself a favor and check out our other content by clicking the link below. Now, upside, if we happen to push above 186.32, this market could short cover its way back to 193.01. And these are the two levels right here. Heavy below 186.32, expecting that 146, 156 area over the next few weeks. And then we turn bullish again above 193.01. So if you're short the market or you're playing the short side, I don't think there's a good reason to be short into next week or into May trade if we happen to close above 193.01. And then I would expect, if we were to close back above 193.01, this former channel bottom at 217.54 within a week or two, and within 2 to 3 weeks realistically of closing back above 193.01, that 229.39 long-term channel top in reach. So closing above 193.01, you're playing the long side into May. Invest short-term investing, near-term investing is the play above 193.01, and then inversely playing the short side below 186.32, which we are below. So this is a range of resistance. And we are heavy below 186.32 into May, expecting the mid 140s to mid 150s that I've already outlined. And inversely, if we close above 193.01, you reverse. Unfortunately, if you bought then the 145 or 150 out of the money puts, you may consider liquidating those and once again reaching for the 229 out of the money calls that don't expire for at least a month or two. I don't think that there's really anything else that needs to be said for Thursday's Tesla report. I hope this all made sense. All the minor points have been carefully chosen, all well suited for aggressive day traders. But just know that holding below 186.32 today will keep 169.16 in reach within the day, and over the next couple of weeks, 156.68. That's all I've got for Thursday's Tesla. You have a great evening.